All right, I need to talk about this technique here with the trend lines and the moving averages. I'm just going to do a quick test visually here. The rule is wait until price falls below both for a short, falls below a trend line, breaks a trend line, and falls below the moving averages. Both have to be broken. And wait for price to rise above both for a long. So it's got to break a trend line to the long side and be breaking both moving averages to the long side. All right, moving averages for the best should be close together, but not always. And we should be breaking both moving averages if they're close together. If we're breaking one moving average, there are certain special, more advanced rules for that, which I'll cover, but this is the basic gist of it. So let's take a look at what we're looking at here, coming to the downside with a strong move. Okay, we're just going to start with these trend lines here. Okay, this first trend line right here was broken and it crossed over the 20 moving average, and I call that no good because the moving averages are not close together, right? And there's no reason to trade just over the one moving average unless we got some kind of a test and a push, which it almost did right here, but not really. It tried to do that right here, but failed. So this would be a very tricky area for some people. All right, so here's another trend line coming down from the top of this pivot to these pivots right here. And we see that it closes above both moving averages. So I call this good right here. Depending on where you put your stop loss, however, it could have just been a break-even trade, because once you get 1-to-1, you break even. If your stop loss is here, your entry's here, your 1-to-1, you break even. If your stop loss is under this structure, it's definitely possible that you might not have even gotten anything. You might have had to break even on that altogether. Well, where the entry is right here. Okay, so if that's the entry and the stop loss, 1-to-1, you break even, or you take profits up there where the 1-to-1 mark is. Okay, so the next one, good but small stop loss. Now this is to the downside. Let's take a look at that real quick, because it's not a perfect situation. It's not going to be perfect. And I'm just looking for something that has, a good high probability of success. So what we're looking at here is this trend line here going up. And price breaks that trend line, wherever you want to put it. There's different ways of putting it. The highest peak here, it breaks and it starts to close below both moving averages. The problem here is that, price is, by the time it breaks, it's a good distance away from, where you would end, it broke. Okay, this is the distance between where it broke the moving average and it broke the trend line. So that's a consideration to think about, So I'm going to call it good anyway, but it's a small loss nevertheless. So the next trend lines we're watching is this one here, off this pivot, off these, creates a flat top up here. All right, starts to break over the trend line, creates lower lows, and then finally it breaks below the moving averages right here. But it didn't break below the trend line until right about here. So you still have this distance to deal with. And the moving averages are closer than something like this over here. See how far apart that is from this when it breaks over. So I would say that this was a good entry here. I'm trying to figure out if we can get closer in range between the time it breaks the trend line and the time it breaks the moving average. But it seems to be a pretty average space so far. This was a good short. Okay. And then we're trying to draw trend lines down. And we're trying to draw these trend lines down. So, anywhere that we put this trend line here, let's take a look at this real quick, because I do want to be fair about this. Probably off this pivot here. And you can see price broke the trend line. It did not break any moving averages. It did break one moving average, but look, it just immediately falls. There's no consolidation push above, like we started to have over here when it broke the 20. It broke up, came down, fell under, tried to get over the top of it. Some people might want to go long right there and keep your stop loss tight. So that's why we say no good, because even if it was tried, it was a failure. Back over here though, using this pivot here as a first trend line draw, you could see that it broke over the trend line, did not break over the moving average, and when it did, it immediately fell. It didn't break over both moving averages. Okay, and a lot of times it's best when the moving averages are flattened out, like this right here. That's why I thought this was good but small loss. That it would continue down and at least come back down to these lows like it did over here. It just wanted to go up further. Okay, so let's continue here. So this was no good, not good. No consolidation push over the first moving average. So it didn't close above both. So if it does close over one, you want to see a consolidation push. Okay, so the next moving average is trend line is based off this pivot, and we draw it here. And the next time it breaks over the top is right here, and it is over. Well, it doesn't quite go over. It pushes over once, and it comes right back down. So it doesn't get over both. And the moving averages are kind of far apart. So what are we looking at? Was this good or was this bad? This break right here. I only talked about this one because I didn't really look at this one too much on the notes. Personally, there's nowhere to get in because it's so fast. It breaks over the trend line and the moving average. I guess for a scalping technique, the way to play this right here could have been once it breaks over the trend line and the moving average, the blue one, once it breaks over and it starts this next candle, I suppose this right here for a quick scalp technique could have been the stop loss on that green candle. But where do you get in? If you get in on above it, then you barely have 1-to-1 before it starts coming back down, if you have 1-to-1 at all. So you have to have quick fingers and a special technique and a special skill to catch something like that. Okay, so once it breaks over the top, if it comes back down red, you want to wait for it to turn red to kind of give a retest. It doesn't come back far enough to retest like these candles do right here. That would have been an interesting thing if it bounced off the 20 and continued up. Now that's a whole different ball game, right? But right here, just on this explosion to the top, I don't see a trade on that. Personally, I'm not going to try to scalp this right here personally. All right, so let's take a look at what we got here. And the next one is going to be this area right here. Yep. Now we have a close. I call it good. A close over the trend line coming down and the 8 moving average. And it puts in this consolidation candle right here at the top. But it's going so fast that it's so hard to really get in these trades after, 1, 2, 3 candles. It does break over the top. It moved up strong here and hit that sell zone. It's going up strong here into the same sell zone. The difference is here is we have a consolidation candle and a retest, and it's possible to put a stop loss right underneath that somewhere. But a lot of times these come back into the moving averages, and it would literally be a great risk to reward if that's in your trading plan, trading playbook. If that's one of your trades, you like to take those risks, take those chances. That's the only way I can see that played right there. That's it. All right, but it is good in that it moved and gave an opportunity over the trend line and moving averages. So I'll call that a good. Here's a not good one. Even though it really did come down pretty well, it's not good because it only broke the trend line and not the moving averages, right? It only broke, so it could have easily bounced right here and kept going up. It finally breaks both moving averages way down here, and then it's so far away from the trend line that it's just invalid now. So we start using this pivot as our next trend line, and we get a break right here where it crosses both the moving averages and the trend line. But depending on where you put your stop, it could have been a good setup, but it stopped you out. If you're of course, if you're way up here at the top, then you have a stop loss way up here, and it would have almost come back and got you. And it looks like it would have been at least 1 to 2 to 1 return on that. But that's one of those neck breakers where it's coming all the way back up. I still think it was a good opportunity. Here it's better on this third trend line. It's much better. But where do you put your stop loss? You have to put your stop loss in the same place, because there's really nowhere else to put it unless you're going to do that momentum play again. And a lot of times price will go back to resistance or go back to resistance here and consolidate for the push. Here we see the going back down to support here, and this little red candle consolidates for the push. And it's tricky because it comes right back up and does a little, if you get in somewhere here, this little whip up, more than likely if you're tight on these momentum plays, you got to be tight with your stop. More than likely that's a stop out for break even or something on that. Depends on if you can really be patient and hold for this move. And where's my stop loss? If stop loss could be on this at the trend line, you know, because it is breaking below the moving averages and everything. A lot of times you got to give it room to go down before it comes back up to these pivots. So if your stop loss is there and you're breaking in, you're getting in on this consolidation candle way down here, then that's the stop loss. As it's going down, we take our stop loss and we slowly move it to break even. Might have been able to hold it for this, right? Might have been able to hold it for this. If my stop loss was here above the candle that broke the trend line, my entry was somewhere here on this consolidation red candle, then as it's going down, as price is going down to here, and especially down to here on this green candle here, that's a 1-to-1. It's quite possible I would have put it right here and got stopped out on the very next candle. Or we can try to come down just a little bit on the candle that we entered in on, and we would have held that through that. So that's just a choppy looking market, to be honest with you. All right, so the next trend line break is a break where it only crosses over one moving average, but you get this test and push. It's very nice. Back into where the area up here. So somehow if we can have a stop loss, I don't know, you'd have to put it underneath this pivot. It came up and retested and came right back down, and it started to push up. Did we get a 1-to-1 on that? Let's see if we do. Enter in on the breakout, and 1-to-1 is somewhere up here. Yes, you would have got 1-to-1, but a lot of times, I guess if the market's choppy, you should just take your 1-to-1. If we take our 1-to-1 in various areas, you could start making money, breaking even on this, or breaking even on this, because if you were to wait for 1-to-1 and then stick it to break even, it comes down and you got break even. Okay, now let's take a look at this trend line here, the one going up, and it's broken. It breaks everything. It breaks the moving averages. That looks like that's just going to keep rolling right down. It breaks this little trend line up. It breaks the moving averages, and it's so choppy. So this would have probably been break even or even a small loss, depending on where you put your stop loss. Let's take a look at that. Once it breaks here, we try to wait for it to come up. Honestly, it broke on this big red candle, and we get this green candle and when it comes up, I probably would have tried to enter in somewhere near the moving averages on this green candle as it comes back up. It's possible. So the stop loss could be, somewhere up here on this spiky candle. So something like this. It might have been 1-to-1 on this, holding it down to this line here, or definitely break even depending on where we get in. So it's a tight little range, and if it's not moving fast, it could have worked for a break even at least. Here's a trend line coming down this way, and it breaks everything. This is a good trade. Call this a good trade. Stop loss is manageable, easy under these pivots, under the consolidation inside the circle. Entry is probably over here if you want to try the breakout part. And the 1-to-1 is obviously going to be up here where it makes it. And it looks like it would have been a close call on this. Seeing this come up here, putting it right on break even immediately. Once it hits this 1-to-1, it would have stopped out right here. Trying to come up a little bit, maybe even to this pivot. It's not much of a move up. Or even these candles here, just to cut the loss a little bit, would have saved us. Sometimes going to break even is the best thing to do. Sometimes you just can't make any money with it because of the market, the way the market is. It's just so choppy. All right, after these tests, in a sense, you would know to put your stop loss here. That's almost break even. So, as it's going back up here, if I were to go to break even, here it comes down again to stop out at break even. So using the structure is a better way to do that. And then it just keeps going. It's just a nice move. And I guess catching a move like this is worth all the break evens that we have to endure. It's just worth it. Catching a move like that makes everything great, right? So let's take a look at these last few on our chart today. Here's the break of the trend line. It does not really, here's a push. And then we talked about that push strategy where if we get a consolidation after it breaks the moving average, trend line and moving average, there's a possibility you could do a scalp trade with that push candle as your stop loss. It would have hit 1-to-1 on that, but you're fighting an uptrend, and I just don't prefer to do that. If it's uptrending, we want to find trend lines and moving average breaks that are going, with the trend. So let's see if this last one here does anything for us right here. Yeah, we do. We get a break over everything. Stop loss under this consolidation. And where do you come in at? Well, if it breaks over, you try to wait for it to come back. If it's slow enough, sometimes the market breaks and you can't get in it. And sometimes it breaks and you got time to think. So let's say we entered on a pullback, even this high, we would have gotten 1-to-1 on that, and that's a good thing. Okay, so here's another trend line break here, and by the time it comes down to the moving average, it's too far away. I don't really see any entries for any kind of, it just moves so quick. But here's another entry here for this particular trend line, and this would have worked. If we put our stop loss here, somehow it breaks, consolidates, comes back up. Even if we get in a little late, say we get in down here, there's plenty of time to break even and catch a 1-to-1 on that. And that's all we have on this particular chart. That's the idea behind this strategy, the thinking, and I hope that we can build this into a solid strategy that works. Peace.